I have confirmation that you can see my screen as well, so we can kick this off. First of all, I would like to thank you for joining us for this webinar, where we will discuss on the topic of Brexit and how potential Brexit from the EU may impact your currency trading. Now, first of all, let's go through the agenda. First, we're going to say a few things about us, Blue Sky Binary, that we are giving this webinar. Then we're going to discuss about what is the Brexit. Then we're going to discuss on the reasons why the UK is considering it. Then we will be discussing what are the economic impacts that it will have. Then what is the impact on your currency trading? Then what should you do as a trader now that the Brexit, the vote for the Brexit is approaching? And last, we're going to end up with a few Q&A. Now, a short introduction about who we are. We are Blue Sky Binary, which is an advanced binary education and trade recommendations group. We comprise of senior traders who can teach various binary option strategies and who can offer you 24-hour trade support and analysis in order for you to be able to trade safer. In collaboration with the binary.com, we are delivering these webinars in order to educate you, the members, to become successful binary option traders. And these webinars are either on technical analysis and technical issues and indicators, or on events that are happening in the market, like the Brexit right now. Binary.com meets our high watermark for quality as a highly trusted broker amongst an industry where trust is a major issue. Now, having said all this introduction, let's go inside and see what is the Brexit. First of all, what is this term Brexit? The word Brexit comes from, is a colloquium that was created from the word Britain and exit. So basically, 28 nations right now comprise the European Union, and the UK is seeing increasing support this year to pull out of the EU project, resulting in significant macroeconomic consequences for both the UK, Europe, and their currencies. Just remember that UK entered the EU around 40 years ago, and now it will be almost, I think, 46 years ago when this referendum will take place. Now, this event is complex and drawn-out process with many uncertainties that have no certain outcomes. Currently, around 20 to 30% of the UK Conservative Party MPs and 38% of the nation wish to exit. So right now, 38% of the nation, based on recent polls, have wanted Britain exits from the EU. 45% would vote to remain, and 17% is undecided. So as you know, this now is, as you can see now, this is very close. Now, the current Conservative Party, run by David Cameron, will be attempting to renegotiate the terms of its membership to a more favorable one, so that by 23rd of June this year, the day where the UK public votes to stay or leave, public sentiment has swayed and nothing changes the status quo which has been in place since 1973. So basically, David Cameron and the government of the UK wants Britain to stay in the EU. And they will be pushing for a better agreement, for better terms for this to keep happening. And also, I would like you to know that although the referendum is this year, this is a public referendum, the public votes. In 2017, it's the actual governmental referendum where the government is going to vote and take a decision. So there's a 1-year gap from the public referendum until the governmental referendum, just for the governmental vote, just to let you know about this. Now, let's discuss now about the reasons why the UK is considering Brexit. The main reasons are the following. First one is immigration. Ministers wish to stop EU immigrants from receiving benefits until they have been resident for 4 years. They wish to limit the offtake that the UK is partially required to participate in during refugee crisis. Now, the second reason is competitiveness. The UK wishes to reduce the burden of excessive regulation that EU members face conducting business in the bloc. Furthermore, they want access to new markets through turbocharging free trade deals with USA and Asia. and they believe that leaving the EU is going to allow them to have better deals and faster deals with those regions. Economic governance. The UK wishes to obtain confirmation that the euro is not the only currency in the EU, which ensures countries outside the eurozone are not disadvantaged. The UK doesn't want to be forced to contribute to eurozone bailouts. The UK government wants to help, but they don't want to be forced to help the eurozone. Sovereignty. The UK wishes to give greater powers to national parliaments to block EU legislation in an attempt to retain its sovereignty. Now, what are the economic impacts? Here are the potential economic consequences. The first one is on trade. UK's biggest trading partner is the EU. Leaving it could leave UK businesses in a catch-22 situations. They may not enjoy the favorable treatment they do when transacting with EU businesses, but may have far greater freedom to trade with companies outside of EU. So, as we said before, it's a catch-22. So they are good in both ways. Now, on the labor side, UK has been a net beneficiary of free labor mobility across the EU. This has attracted an international skill set into the economy and helped productivity. Leaving the EU could have the opposite effect. Leaving the EU would leave UK outside, not possible to attract talent and professionals from the EU, and that will mean that they will lose a lot of the talent and a lot of the possibilities and potential of this economy. Now, the next one is foreign direct investment. According to the London School of Economics, leaving the EU and securing a free trade agreement with the EU will result in a loss of around 2.2% of GDP, which is significant, but still could be said that it's manageable. However, if not securing desirable trade terms, the UK could suffer a hit of 6.3 to 9.5% of GDP, making this a very risky gamble. And also the EU itself would face a hit over a 10-year period, as this is how long it would take for the UK to actually leave. So although it could be the vote and the referendum, everything could be, and it's all decided that the UK leaves in 2017, it would take a good 10 years for the UK to actually leave the EU because of the complex rules and legislations that are already in place in the EU. And something like this will cause a very different situation and will cause a lot of problems for both the EU and the UK. Now, a lot of you may think, okay, how would this impact our currency trading, our sales trading binary options? Well, here are some potential impacts on certain currency majors. So let's discuss a bit about the euro first. The euro is considered a risk-on asset, and in the event the public referendum this June does show a strong vote in favor of a departure, this could result in a sell-off. Net-net, the EU would stand to lose out if the UK were to leave. Now, the USD, for the United States dollar, is a risk-on asset at certain instances, but a heavy asset in others. The link between the potential departure and the dollar remains unclear at this stage, but we should expect heavy volatility in June owing to this. So although the situation about the euro currency is a bit more clear, and we should know more or less what we should be expecting depending on the decision, for USD there's a lot of volatility, so nothing will be certain for this. Now, the last currency, let's discuss about the Japanese yen. Japanese yen is a haven asset. UK leaving the EU is bad news at first, and hence Japanese yen may experience strength along with other haven assets such as the Swiss franc. So basically, since Japanese yen is a haven asset, and since UK leaves the EU, people are going to react to the bad news and they're going to turn to haven assets so that they have less risk for them. And Japanese yen is one of them, and the Swiss franc is another one, and those could benefit from such an event, from such an outcome. Now you would ask yourself, what should you do as a trader? Here are now some suggestions on how to navigate a complex situation. First of all, we're gonna separate this, divide this section in three parts. So first, what you should do right now, and then we should discuss about what you should do around the 23rd of June, and then what you should be doing a lot after the 23rd of June. So basically, let's start with now. So for now, you should do nothing until the middle of June, as the market will not start to worry about this event, about the Brexit until then. So right now, you can continue trading the way that you've been trading. You are not affected by the Brexit at this moment. But on the 23rd of June or a day before this, then you may get heavy volatility surrounding the public referendum. Depending on how it goes, if they decide to leave with a landslide, you may have a near Six Sigma event with moves of 200 to 500 pips on the cable, Euro GBP, and slightly less on other majors. Remember that something like this happened 1 year ago, around in February, when the peg, the floor for the Swiss franc was removed. So, and there was a drop of 1,500 pips in certain currency pairs. So it's strongly suggested that you do not trade that week unless you actively wish to trade the news and be aware of the big movement that may happen that day. And also, if in case you're trading FX, then have a very strong stop loss management routine for those days especially, because you could experience a very heavy movement. Now, for thereafter, if the referendum does vote in favor of an exit, then the actual government referendum does not happen until 2017 end, which means that uncertainty will still exist from now until end of 2017, which will cause strange volatility patterns in GBP-related crosses. So, if the referendum votes for an exit, and until the end of 2017, where the actual decision will be made, there will be a lot of volatility for GBP-related pairs, and it's going to be very difficult for those pairs to be traded. Now, we've gone through the presentation, and I'm open to any questions you may have on Brexit, and I can repeat anything you wish. And so please use the chat box on the right-hand side in order for you to write your questions, and I will be happy to respond to them. Okay, I will wait 1 more minute for questions. Okay, since I see no further questions, what I'm going to do is next I'm going to discuss a bit about Signal Hive, which is actually a product that is created by Blue Sky Binary and is offered with an integration with binary.com, and it's something that you can find that you can connect your binary.com either demo or live account. So if you bear with me for a second, I will share my screen and go over the Signal Hive very briefly with you. Okay, so now in theory you can see my screen, and what you see right now is the inside of Signal Hive. So basically here, what you can see, this is a signals marketplace where you can see robotic signals and you can see human signals. So you can see all of them here right now. These are live signals that are being posted either by human traders in this part or are identified by our algorithms here on the top part. Now, you see with the red background are the signals that have lost, with green the ones that have won, and with white background the ones that are still active. Now, this is a service, and how this can be used with binary.com. This is the interesting thing. We have created two ways that you can integrate this with your binary.com accounts, either demo again or live. Basically, we have created the hybrid system, which is basically allows you to fully automate or semi-automate what's going on Signal Hive. So you can connect your demo account or your live account to any of these streams here, and so any of the trades that are happening will be replicated automatically on your demo live account. So this is the first mode, which is the fully automatic mode, and this will happen automatically. And the other thing that could happen is also the manual trading, the semi-automatic way. The semi-automatic way, what will happen is that every time a signal gets fires, then you will see here a small icon, and I'm going to show this to you soon. A small icon will appear that will allow you to replicate a signal to your account at the same price or at a better price according to certain risk settings that you can set. I will not waste any of your time on this. I'm just going to go through 1 second. I'm just going to go through here. Signal Hive Hybrid. This is to show you exactly. This is how the replication icon would look in order to automate this on your account, to take a signal. So basically, here a signal appears, the replication button comes, you click on it, and then this pop-up appears, and you can select whether you want to trade it right now or wait until it reaches a better price and you actually take a trade. This can all be done automatically, and it's very easy to set up. And if you need any information about this, you can reach us at support@blueskybinary.com, or you can add us on Skype, either Blue Sky Binary or Signal Hive. And you can find us at blueskybinary.com and signalhive.com, and we offer a 7-day trial where we give education and trade recommendations. I'm just going to wait 1 more minute in case any of you has any more questions, and I'm free to answer questions either about Signal Hive and the hybrid module or about the Brexit. Okay, thank you very much, everyone, for attending. I wish you a pleasant night, and you will be having another webinar again early in June, so feel free to attend. Have a nice evening, and talk to you very soon.